What is good, everybody? Welcome back to the channel. I was supposed to originally drop on Wednesday, but it was a good friend of mine's last day here in Boston. So, we went out and we did a lot of different things and I just got time to chill with him. And now I'm continuing to record this video. It is week number 16 and I can't believe I'm saying this, but we've been consistent for 16 weeks straight, consecutively investing into the stock market with our strategy, the dividend portfolio. So the dividend portfolio is that I hold stocks and they pay me cash over the year, usually every month or every 3 months or every 2 times a year. Pretty simple, pretty easy, guys. The whole thing with this is that we try to make sure we acquire assets at a discount price and that they're paying a good dividend and that the company is healthy and has a good future growth for the dividend as well. Let's get into it right now. Thank you guys for watching, and guys, subscribe right now and smash the like button. All right, shout out to Khalil P. I just got a free stock and he got a free stock as well because he signed up with my link below. And guys, you guys can get a free stock with the Robinhood app and also 2 free stocks with the Webull app, and it's down below, guys. Just sign up and you guys will be rewarded. And it's good that you guys are all taking action. This is the second person who signed up for Robinhood, and then I have a ton of people who signed up for Webull. So take action right now, guys. Remember, the younger you start investing, the better off you are in the future, and the better off that you'll learn a lot more over time, and you'll be just as good as the next person that is good at investing. So shout out to you, Khalil. Let's just go back to the main menu. On the day, I am down currently $28.60, which equals to 0.39%. On the week, I'm down $88.82. On the month, I'm down $26.14. Oh, sorry. On the month, I'm up $26. Sorry. On the 3 months, I'm up $255.97, which equals to 3.48%. And then on the year, I'm up $283.03, which equals to 3.85%. As you can see, all time, the chart goes up and down and up and down and up and down. And I'm down on the day and on the week. Don't let that discourage you guys. What I'm saying? We're in it for the long run. That's the whole point of dividend investing. We're in it for the long run. We're not here to make a quick buck. It's all about the long game and it's all about the cash flow. Yesterday, I had bought 1 brand new stock and I have bought into 2 stocks that I already currently have. So let's just go down the list of what I own. Apple shares, AT&T, AG&C, British Petroleum, CubeSmart, ConocoPhillips, Eros, and that was the free stock that I got from before. Coca-Cola, Disney, Energy Transfer, Ford, Hanesbrand, SPHD, Iron Mountain, JP Morgan, Peggy, Pfizer, Royal Dutch Shell, O Realty, Starbucks, I think it's Unilever. What is it? Yeah, Unilever, CEFL, 3M, WBA, and XLY. You might have heard what's new to my portfolio if you are a avid viewer, but I had got a WBA. Now Walgreens, and this is a dog of the Dow, which means that it's in the Dow Jones average, and the Dow Jones average is just a collective of the top 30 largest companies in the United States, and it kind of reflects on how the economy is doing. This is what forecasters and analysts use to see how the economy is doing. I was buying into this because Walgreens, I live down the street from one. They're all over the place. It's like in Massachusetts, it's like CVS land, but there is Walgreens as well, and that is nationwide. So I get to see a lot of Walgreens, and obviously it's like CVS, the business is always going to be there. But on the week, it's been down 2%. On the month, it's been down almost 10%, and then on the 3 months, down 2%. And then on the 1 year, it's down 26%. Don't be confused as to why I invest into stuff that's down, because it should be simple, guys. Remember, the whole status quo is like buy low, sell high, but a lot of people don't naturally do that. It's hard for somebody to buy something that is losing value, but when it is losing value and the company is straight, I've looked at the, just some simple financials and just data. Like, it's not that hard for me to buy this asset that's depreciating because I'm buying it at a discount. You should look at stuff like that at a discount. So I bought this at $53.79. I bought 4 shares of it, and then as you can see, I'm down 1% today, but it's a long term, and it does pay a dividend of about $1.83. So that should be around $7-8 that I'll get annually. I'll put it all at the end of the video, guys, so just stick around. And then I bought into Ford. I just bought one share of that. You know me, I like my Ford, and they pay a good dividend, 60 cents a year, which is 15 cents every 3 months. And then I bought some more AG&C, and this has been killing the game right now. Like, whew, it's been killing it. But I bought 2 shares yesterday, which increases my cash flow every year. So I actually wanted to go down and check out my watch list and talk about it a little bit. SPG, you guys, if you haven't already known about it, since I talk about it every video, that's what I want to get into. Royal Caribbean, you know, the cruise company, I want to get into that as well. So I have a bunch of like ETFs. I have a bunch of ETFs on my list. That's something that I've been starting to get into. As you can see right here, I have XLY, which is a consumer discretionary select sector. This is stuff like, you know, they have Coca-Cola, they got Amazon, they got Home Depot. They're growth companies, and it does pay a dividend. So all these ETFs, they do pay a dividend, because guys, I don't invest into stuff that doesn't pay dividends. I need cash flow. You know, they have the XLP, XLE, XLRE, and these are just, so right here, this is a real estate ETF. So real estate, this is an energy ETF. This is a utilities ETF. I'm trying to like start diversifying into ETFs instead of just individual stocks right now too, so that, you know, my portfolio is balanced and is more on the safe side than just, you know, individual stocks. But yeah, that's like all I got for just looking at my portfolio. Let's just go into now seeing my dividends, if I got any recently, and I think I did yesterday as well. So dividends, let's go to dividends. Let's just see what was paid out to me. So January 22nd, I was paid out 89 cents from the eTrax CEFL. I have 4 shares, and amount per share is 22 cents. Now this is one of the more risky dividend stocks because it does pay at like a 15% dividend, which is very, very risky. And then I have some coming up, you know, January 31st, $2.11. JP Morgan on January 31st as well is paying me 90 cents, that's a beast. This upcoming February, we got AT&T paying me $10.40. And that's a big amount, guys. $10.40, like, it'll get you some good stuff. It's $10, you know what I'm saying? So I got that passively. This is all 100% passive. I just put my money into these assets, and they just pay me every month or every 3 months or every half a year, which is awesome. And I love, you know, just receiving free money. That's what it is, really. Getting to the $7,600 mark is amazing, and that, you know, it's a journey, and over time you're getting paid back that in dividends. You know, we're almost at 10K, which is going to be so exciting when I do finally cross that mark, guys. So continue, you know, watching these videos, continue liking them, and remember, guys, for every single like, it's $10 that I have to put into my portfolio. So we had 15 likes. Last one, I had to put $150 extra on top of my $100 that I put every week regardless, which equals to $250. But yeah, Walgreens was my recent pickup. I think I'm going to be still dollar cost averaging, since it is still going down. And just most of the stocks that I have in my portfolio, I'm going to be dollar cost averaging. Dollar cost averaging just means that, let's just say I have bought Pfizer, right? My average cost is $36.68. If I buy higher than what my average cost is, then that's going to boost up the average cost. But the whole key is to buy it lower than the average cost, so that, you know, over time it sticks around the same area. So let's just say if I buy some more now, it'll probably go up to $37 per share technically that I bought it at, obviously, but I bought it at different prices in the past. I got a market buy for 15 shares at $36.57, and then I bought one at $38.28, which boosted up, you know, the price of it. And then I get good dividend off of it. So that's what you want to look for, guys. Cash flow. Remember that. And if you don't know what stuff means, just Google it. I do that all the time, especially if I'm not familiar with what somebody's talking about. It's okay to be you want to be the dumbest person in the room, so that you can soak up everything and you can start learning from other people. And just, you know, it's easy to learn stuff, especially nowadays. just type it into Google. I do that all the time. So don't be afraid and like don't be thinking that you're dumb. You know, just type it in. So guys, I had actually brought certificate from like this historic website on Amazon. It's kind of cool. It's like a piece of memorabilia. This is what they used to use when it came to the stock market. I don't know if you guys can see it, but this is the American Telephone and Telegraph Company, AT&T. This is what a share used to look like. Now we have it on our phones as like digital, but they used to hand these out to people, and it says right here, certificates to this certain person, and then it shows you is the owner of X amount of shares. This person so happens to own 10 shares, and this dates back to 1966. So this is what they used to give people, you know, when they used to buy into the company. They would just fill out the information, give it to you, and now you could just, you know, cash this in whenever you're ready. So it came a long way, but I think I like just certificates like this. It's good like memorabilia, so that's why I bought it. You can go on Amazon, you can find stuff like that. So, but it's actually kind of crazy now that if you do want like a certain specific certificate from a company, you would probably have to go to the website of the company or talk to your broker so that you get a special issued one with the number of shares that you own. But they said that they charge like $500, which is like crazy, because so these things are so outdated. It's just ridiculous. But you know, I would be the type of guy that would pay like $500 for like a customized one that's valid and, you know, that has my name on it and how many shares I own. But thank you guys for watching so much of this video. I'm sorry that I didn't get it out to you guys on Wednesday. For the ones that were expecting it, I'm sorry. It's just, you know, a day late. My friend had, you know, limited time here, so I want to spend all day with him. Smash the like button, subscribe, guys. Keep on doing that. We're almost at 300. We're at 230 subscribers, which is awesome. Thank you guys. I love all the love. Keep on commenting down below. Keep on smashing the like button. I'm here to answer your questions, guys. I know people reach out to me on Facebook, you know, people that actually know me, and they have been asking questions, and they're getting more, you know, into it, and they're getting more involved in like, oh, I didn't know that my money should be working for me. And it's okay that you didn't know that. Just the fact that you're already like waking up to the fact that how can I make my money grow is amazing. Like, a lot of people go their whole life without even asking them that question. You know, they ask them like, oh, I'll just leave it up to my financial advisor. I'll just leave it up to XYZ. I'll just leave it up to this person. But, you know, we're making that money. At the end of the day, we're spending our hours into a job or whatever the case is to receive money. So you wouldn't want to treat that money like time. You know what I'm saying? You don't want to give your time to somebody else to deal with. You wouldn't want to do that. You know what I'm saying? So start self-educating, start learning, watch the channel. And that's what I'm a big advocate for. Teaching people how to manage your own finances, because really, guys, it's really not that hard. I'm not like a genius right away. It took me some time. It took me some years. But you know what I'm saying? If it's my money, my time, I'm going to want to learn about what I can do with it to make more of it. You feel me? So thank you guys for watching so much. I appreciate it. And I'll see you guys in the next video.